JB here. Hope everyone's doing outstanding. Wednesday, August 6th, 3:15. It's fine. Afternoon talk. Quick about the market. Some names I'm looking at go from there. S&P in the green, up over about 0.75% here. Back-to-back sessions. Well, at least we didn't test the lows from yesterday. Yesterday we didn't test the lows from Friday. So all things considered, it looks like a decent uptrend, and we'll see how what the rest of the week plays out. There's not much in the way of catalysts. After the close today, there's like 300 companies reporting, um, but that's about that. This morning, you had news that Apple is set to invest another 100 billion in capacity in the U.S. Manufacturing, what have you. You see the stock up. I made a kind of like a joke. Uh, Apple's market capitalization gain today is over 120 billion, whatever, and the investment is 100 billion. So you're pretty much getting almost a little more than a dollar. Well, a dollar 20 for every dollar you invest in the U.S. if you're a company. So hey, some of these other companies want to go out and see their stock price go up. By all means, do some deals with POTUS. Um, Also, McDonald's this morning, decent earnings. I mean, you see what happened with some of these other casual dining names at McDonald's just on the tear. So good sign there. Yeah, and then 2 more days left in a week. Still have the range 636 to 618 on the SPY. I mean, we're getting right up there at 633 earlier. I mean, maybe some chop tomorrow. We'll see. And maybe up to 636 by Friday, maybe higher than that. Nice little chart here. Ryan Dietrich always posts some great stuff, and sometimes the market's all about perspective, right, and context. And a lot of folks, some folks look at the market and say, "Oh, all-time highs. We can't. The top is in. Short, pullbacks coming," and then we go on epic runs, right? So it's always important. Let's see here. Um, let's see. I don't know if we can put this over here. It's always important to have kind of like a context view on things, right? So, uh, for me, you'd look at this, and some people might look at this and say, "Wow, there's a huge opportunity for more all-time highs," right? So I'm not really that big into chart overlays, but certainly interesting stuff. Usually, the overlays you see are 2008, the dot-com bubble, 1987, right? Rarely see like overlays in regards to a bull market, but hey, nothing's out of question. So that's kind of what I'm looking at today. After the close, a lot of names reporting, especially some of these sorry about that, folks. Especially some of these momentum names, smaller cap names. App Lovers reporting. I mean, that's like a divisive name. Almost reminds me of Roblox, right? Roblox back in the day, it was a tremendous, I hate to use the term, like a circle jerk of shorts and all the short pieces that were coming out. It's like they all got together and tried to just destroy the name, destroy the stock. And hey, maybe they still might, right? Uh, but that was the devices. They did the same thing on Roblox, right? And with Roblox, it wasn't even so much about the fundamentals. It's like, what are they doing about parental controls and the shady stuff, disgusting stuff that goes on the platform. But you know what? That happens on all these platforms. But they were that was already out there. But these short pieces came out saying the same thing. Oh, it's going to, and then take a look where Roblox is now, all-time highs. So not a name I would trade them. Duolingo, right? Duolingo's a name I remember looking back in December. I'm like, oh, with the tariffs and everything going on, here's a name that could be a good short. And you know what? It was actually doing well into the end of the year. I actually have the chart at the end. And then uh, Citron Research came in, said he shorted, it had earnings, and went from like 300 all the way up to 500. He hasn't talked about it much, but it has come well off its highs recently. And it's like an interesting story, right? So I'll talk about that in a second. Other names, Elf, DraftKings, obviously JOBY, and I'll talk about JOBY in a sec. Beyond Meat, Groupon. Groupon's an interesting name, right? It's like one of those hedge fund short squeeze names. So people have wrote a bullish piece on Groupon back in the day. And not one I'm going to get. Too many names, too little time. Lyft reports after Uber's earnings this morning. DoorDash, Bros. So a lot of names reporting. That's just the tip of the iceberg. All right, so that's kind of that on the overall markets. I remain cautiously optimistic, right? And I was saying this morning, 626 on the SPY. That's probably the spot for the hedge today. Tomorrow might be different depending on what we open. But I continue to, think that maybe there'll be some chop consolidation. There's room for, or at least an opportunity for maybe the bears to come in at some point. I don't think that that's going to happen, but you got to leave that. There's a chance, right? So if there's a chance, play how I always play, breaks the support. That's when I get my hedge inputs. All right. That's overall market. So now just quick on individual names. Joby reports after the close today. Not much commentary to add. I still have the last of my October 20s. I was thinking of rolling the last or leaving just a couple and then adding some $30 strikes. But it's like, even you watch today and it's the what would be the best case outcome here? It's not like they're gonna have a beat and raise, right? So they're not gonna raise earnings or revenues and things. So it's all about the updates and their cash position and is there risks of offering and liquidity issues and things like that. So if that's the case, I mean, what they would have to, and they've already had great news events recently, right? The defense partnership last week. Then you have the acquisition of Blade on Monday. You have this Japan partnership Tuesday. So what else? What else could there be? So it'd just be more about their timelines, the scales, the certifications, all that fun stuff. So if there's positive updates, maybe it trades over 20, 21, 22. I don't know. But to me, there's risk, right? And the risk would be any kind of slowdown in timelines, pushing things further out, things like that, cash burn issues. So I think there's more risk of a pull than a reward of a crazy move to the upside. So hence, I'll just hold the rest of my October 20s. And even if there's bounces or hiccups, I'll continue to hold those. And maybe after earnings, I'll look for other opportunities to play for upside. So that's kind of my thoughts there. Still bullish the name. Still think it trades higher into the end of the year. That's Joby. Lemonade this morning. The slow start and then just started to take off. Boom. Tested $50. It's a fickle name, right? So I mean, Lemonade is one of those names that could be $50 today and $42 tomorrow for no other reason than shorts take control or you have some crazy analysts come out. So didn't want to be in a spot where I lose the profits on my weekly. So after it broke over 50, locked some more of my $50 strikes in for close to 500%, and then it started to dip a little bit. And then once it came back up to 50, I locked the rest in for a little over 400%. The not the irony, but the premiums didn't come back in the calls like it did in the morning. And of course, I mean, time decay on it is going to bring down the premiums. But even right now, I was looking at the $50 strikes, so right about where I exited this morning. Uh, in lieu of that, instead of holding the risk and worrying about some kind of catalyst tomorrow or Friday, I went and got strikes into next week. So that's kind of how I played it, used some of the profits, rolled it out. And then maybe there's some kind of kick in the pants tomorrow, an upgrade or just continuation. 53 and change breaks, it's off to the races. So that's Lemonade. Serve disappointing. So small caps this morning just took it on the chin for. I didn't see any catalyst, no news after being up 2.5% on Monday, up another 0.5% Friday, to Tuesday, excuse me, and then down. It was down over 4% Friday for the week, then up 2.5% Monday, up 0.5% Tuesday, and then it's just sold off or was selling off today. And I think it took a lot of the small cap names, or at least they found pressure at the open. At least that's what I think Serve sold off. They had great news after the close yesterday with Pizza Caesars. Earnings tomorrow, so I'm not going to do anything. Just the unfortunate thing is I want to see continuation and a run into the 11s, if not higher, and it didn't do that. So I might have to hold on to the rest of those calls I added on Monday. But risk reward, right? And to me, I think when you look at Joby, I think I wouldn't say that there's a huge risk for downside, but if I had to pick a side, I mean, I wouldn't be surprised to see it's solidly red tomorrow, and then maybe I can add some more strikes. Serve, on the other hand, I mean, it's trading right near its monthly lows. I don't know what other. It doesn't have the same kind of situation that Joby has, where there's certification. Serve is just in scale out mode, right? Where are they at with the 2,000 robots for Uber? Where are the other markets outside of the recent one in Atlanta? So I think if I had to put a probability on Serve, I would say 75% plus that it's to the upside, but nothing's certain. So I'll just continue to hold those calls. A line disappointing. I mean, opened kind of flat. Looked like it might gap in the morning, and then it just melted all the way down to 134 by noon hour. It's bounced a little bit here. Comes with the territory. The spec lotto calls. I might look for some other positions, but I'll wait for some buyers come back in. Maybe tomorrow or Friday. Setup still 142.50. Once that breaks, I think it's up to 147.75. And then Reddit just hit highs here a couple minutes ago. I had those 240s yesterday. I closed them out. They were actually down like 60% into the end of the day. And then today, even with the bounce, I was watching the 240s. I'm like, oh, they're about flat for my entry. And then it would get into the green, and then it would dip back under 210. Then it would get in the green, and then back to the dip. So then I was looking at the 250 strikes. They were like 90 cents and then 85 cents. You know what? It's like almost torturous, not torturous, but I'm like, if I don't feel confident enough to add those strikes, I'll probably just wait, right? So, uh, 250s, 260. I think it trades substantially higher. And I think if you look at Reddit, it's kind of like, and even right now, the 240 strikes are up 112%, but that's only because they came off well off the highs yesterday into the afternoon when it closed under $200. So my timing would have been impeccable, right? The only way I would have been able to play this right yesterday was to add the calls at the end of the day. And even that, you would have had to hold the morning right at the open, thinking because it was gapping lower that it wasn't going to run. And then boom, it took off to the races. But I think the longer this Reddit move continues, like the longer it stays green, the more articles come out, the more eyes get on, and more people start to believe in the story that, hey, this is stock to be 250, 260, 300. So, at the same token, I'm just being cautious, putting risk on. So I'll continue to be patient. But I was looking at the 250s earlier, and they were like 85.90, and they're still 85.90. So that's the higher strike that has a decent amount of open interest on it too. I don't know if some of those are spreads, but I'll continue to look at that one. And then here's Duolingo, right? I mean, just take a look at this dip from 525. No big news or catalyst, right? So it had its earnings back in at the end of into May, and this is Citron was short. He might have been shorted in April into three somethings or 400, and then boom, all the way up to $500 or 550, and then it's kind of been in meltdown mode since. And I don't know if this is analysts trying to get ahead of themselves just in case they got it wrong. But Duolingo's like such a great story, and when you look at Citron Research's negative spin on Duolingo, it's that like all these other platforms and AI is going to like supplant what Duolingo does. But Duolingo, it's like if you've used it or you know someone or you have kids who've used it, it's like such a great platform of learning, and the way they monetize it and the way they're able to get revenue out of, because it's like one of those freemium models, right? So you use it for free, but then for upgrades and little things, it's just very ingenious. And I it's like I don't know. So not the issue here is, did I miss the early stages, right? Is this the end of the huge growth and maybe it's kind of like matured a little bit? So one of those names, only monthly strikes. You start looking even in the mid 400s for the August strikes are way too expensive for how I trade it, but certainly an interesting name after the close. And then last but not least, Carlytics reports after the close as well. Hopefully decent earnings. I think that's all it'll take is decent earnings and it can take off. I mean, it's pretty funny, not funny, but you look at Open Door today and you have that hedge fund guy who sparked this whole meme craze on it. He's saying, what did he say? I don't know what he said. And then you have Marcus Lemonis, right? Or whatever. I remember watching his little show. He used to turn around those small businesses. And then he goes on and becomes CEO of Beyond, what was called Overstock.com, right? And then they acquired the name for Bed Bath & Beyond, and then they changed it Beyond, and the stocks got absolutely punished. Like that's destroyed. And then he comes in response to the tweet for the hedge fund manager that's long Open Door, said, oh, they should partner together. They should work on their customer acquisition costs. I'm like, I look at Open Door, I'm like, that is like a losing business model in this current environment. And maybe even in the most optimum environments for buying and selling houses, it's hard for me to fathom unless they go and they become a distressed buying company, distressed real estate buying company, and then has a team that like really fixes them up and is able to flip them quick. And maybe that's what they do. I don't, that's not what I get from them, but maybe there's a little hope. But anyway, that just leads me to Carlytics. Carlytics a totally different story, right? I mean, decent revenues, great partners. You know, I've went on rants for a while, Carlytics. I'm not going to do it right now, but I think there's still an opportunity for it to a beat and raise or good earnings and decent outlook, and I think it starts to run back up into the mid twos and threes and beyond. That's Carlytics. Oh, and then United Healthcare, right? I mean, geez, just like yesterday, teased you, thought, hey, here's the bounce all the way up into the 251s, back down, then bounced again up to 249. It's up, here we go again, and then it just smacks you in the mouth, right? So until something changes, and unfortunately, that mentality might make I might miss an opportunity to get in for bounce, right? It might be some kind of upgrade, some kind of news from the Department of Justice or whatever, but it's just one of those names. It's like I mean, I guess the analogy would be with Boeing, right? So I mean, who remembers Boeing? Boeing was a cash cow, dividends. They had billions and billions of backlog on the Dreamliner. I remember back in the day, Dreamliner was still getting worked on, and just billions of every day was 100 orders from this airline, 50 orders from this. But then we had those two crashes, and it just destroyed the stock. And then the investigations was kind of brought to light some inconsistencies and proprieties, whatever you want to call it. And then it took so long for Boeing to find its footing. And it's still one of those names that anytime there's negative news, it gets hit hard because people are. It's like fool me once, shame on you. Fool me twice, shame on me. So it's like people are less apt to kind of you know trade it or go long it because it's just it's a tough name to the stigma is still the negative stigma. I don't know if that's the same with United Healthcare. At some point maybe that goes away, but yeah, $630 stock at the end of last year, 610 earlier this year, and boom, $246. So all right, folks, let's have a great day. I'll be back on audio later. Rock and roll.